What if your employer has been holding extra money from every single paycheck you have ever received, money that belongs entirely to you, and the government has been sitting on it interest-free until you file your taxes and ask for it back? That is not a conspiracy theory. That is exactly what is happening to tens of millions of Americans right now. And the worst part is there is a completely legal one-page document that fixes it immediately. Most Americans have never touched it since the day they were hired. Some have never even heard of it. That document is your W-4, and today we are going to show you exactly how to use it to put more money in your pocket, starting with your very next paycheck. No raise required, no second job, no side hustle, just a smarter use of a form that has been sitting in your HR file collecting dust. Let us start by understanding exactly what is happening and why. When you were hired, your employer handed you a W-4 form. You filled it out, probably quickly, probably without fully understanding what you were doing, and you handed it back. That form told your employer how much federal income tax to withhold from every single paycheck for the entire year. Here is where most Americans make a silent, expensive mistake. The default settings on that form, the way most people fill it out without guidance, are designed conservatively. They are set up to withhold more than enough tax so that you almost always get a refund when you file. And Americans love their tax refunds. The average federal tax refund in the United States is over $3,000. $3,000. That sounds like a gift. It feels like free money dropping into your account every spring. But it is not free money. It is your money. Money your employer took from your paychecks all year long and sent to the IRS. Money the IRS held for up to 12 months. Money that earned zero interest while it sat there. Money that could have been in your bank account growing, paying down debt, covering bills, or building your emergency fund the entire time. Getting a large tax refund does not mean you won a prize. It means you gave the government an interest-free loan and waited a year to get your own money back. So how do you fix it? This is where the W-4 withholding strategy comes in. The IRS completely redesigned the W-4 form in 2020, and most Americans do not realize how much more control they now have over their own withholding. The new form has 5 steps, and most people only fill out Step 1 and Step 5, their name and their signature, and leave everything else blank. That is the mistake. Let us walk through what each section actually does for you. Step 1 is your basic personal information. Nothing complicated here. Step 2 is where it gets powerful. If you have multiple jobs or your spouse works, this section lets you account for that combined income so your withholding is calculated accurately across both incomes rather than as if each job exists separately. Skipping this step when it applies to you is one of the biggest causes of Americans owing money at tax time or wildly over-withholding all year. Step 3 is where you claim your dependents. If you have children under 17, each child qualifies you for a $2,000 child tax credit. If you have other dependents, that is another $500 per dependent. Every dollar of credits you enter here reduces your withholding dollar for dollar, meaning more money in every paycheck. If you have children and you are not filling out Step 3, you are leaving real money on the table every single pay period. Step 4 is the most overlooked section on the entire form. This is where you can make 3 powerful adjustments. First, other income. If you have freelance income, investment income, rental income, or any money coming in outside your main job, you can enter that here so your withholding covers it. This prevents a surprise tax bill in April. Second, deductions. If you plan to itemize your deductions instead of taking the standard deduction, you can enter your estimated total itemized deductions here. This reduces your withholding to reflect the lower tax liability you will actually have at year-end, putting more money in your paychecks now rather than waiting for a refund. Third, extra withholding. This is for people who want to withhold a little more each paycheck to cover other tax obligations. Most people optimizing their W-4 will leave this blank or reduce what was previously here. Step 5 is your signature. That is the whole form. 5 steps. 1 page. And filling it out correctly instead of leaving it on default settings can genuinely change how much money lands in your bank account every 2 weeks. Now let us talk real numbers, because this is where it gets personal. If your employer is currently over-withholding by just $250 a month, which is very common for a household with dependents and multiple income sources, that is $3,000 a year sitting with the IRS instead of in your hands. What could $3,000 a year do for you? That is your credit card minimum payments gone. That is 3 months of groceries. That is the beginning of a real emergency fund. That is the difference between going into debt for a car repair and handling it without blinking. Now imagine that same $3,000 going into a high-yield savings account, earning 4 to 5% interest, instead of sitting at the IRS earning 0. Over 10 years, with consistent contributions and compound interest, that recovered withholding alone could grow to over $37,000. $37,000 from a form. From one afternoon of reading and adjusting, here is exactly what you need to do right now. Step 1. Go to the IRS website and use the free Tax Withholding Estimator tool. It walks you through your specific situation, your income, your deductions, your dependents, your filing status, and tells you exactly what your W-4 should say to hit your target withholding as accurately as possible. Step 2. Fill out a new W-4 with your updated information. You can submit a new W-4 to your employer at any time. There is no limit on how often you can update it. Most payroll systems will apply your new withholding within 1 to 2 pay periods. Step 3. If your financial situation changes at any point during the year, you get married, have a child, take on a side income, buy a home, lose a job, update your W-4 again immediately. Your withholding should reflect your actual current life, not the life you had when you were first hired. Step 4. Do not aim for a giant refund. Aim for as close to 0 as you can get while staying on the safe side. Your goal is to give the IRS exactly what you owe, not a dollar more. Every dollar beyond that is a dollar you loan them for free. Here is what nobody tells you at orientation. Your paycheck is not fixed. The amount of money your employer sends to the IRS versus the amount that lands in your bank account is something you have direct legal control over. You were handed that control the day you were hired. Most people just never used it. The wealthy understand that cash flow is everything. Every extra dollar in your hands today has more power than that same dollar returned to you 12 months from now. Time is money. Interest is money. And every paycheck between now and next April is an opportunity you either use or lose. You do not need a raise to bring home more money. You need a pen, 30 minutes, and the knowledge that you have had the power to do this the entire time. If this video opened your eyes, subscribe right now, because every single week we break down the financial strategies that employers, banks, and the government never explain at orientation. Hit the like button if you learned something today that you wish someone had told you years ago, and drop a comment below telling us, did you even know you could change your W-4 anytime you wanted? Because most people watching this right now had no idea, and that is exactly why this channel exists.